Just setting things up. Getting all the windows in order. All right. Trades. Yes. All right. Options chain. Okay. I think I got everything here. We hardly got any snow yesterday, maybe less than an inch. It's more like a sleet storm, just sort of coated everything. Looks like it's all gone today. Hi, Dan. All right. Let me just check everything. We got that. We got that. Why is that so small? Oh, that's okay. Just fill it out like that. Got a little acid reflux action going on today, so excuse the coughs, please. I'm going to be going on a no carb diet that will take care of that. And we have that. Alrighty. I think we have everything. How's that chart doing? That's not really ES. I want. So we're getting down to the end of the March ES contract. So you have to pay attention that there is a difference in price between the continuous contract and the ES contract. Let me just show you. So the March 2022 ES contract current price is 42.05. However, the ES contract, continuous contract, is 41.96. That's kind of interesting. It's actually lower than the March contract. So it appears that they've already switched to the forward contract, which would be the June contract. And it is priced lower than the March contract. So we can confirm that by literally going to the June contract and make sure that that is actually the front contract now. June being ESM as opposed to ESH. And you can see very clearly that the June contract is 41.96. So that is what the continuous contract right now is using. So we'll go back to the continuous because that's where my charting is on. Currently, the front contract. All right. So you have to be very careful when you're talking about this stuff. If we were to go to trading Thinkorswim, you can see that they have different contracts that they're using. They're saying the ESM is the current active contract, but not for the options. The options are still using the ESH, which is the March contract. All very confusing. So when you're doing your analysis and you're looking at charts and then you're looking at the options contracts, you want to make sure you have those in sync. It's very important so that you know what you're talking about, which options chain is referring to which options contract. Obviously, the options chain is very specific to the options contract or the futures contract. So what I mean is that you may be doing analysis in what appears to be the ES. You just think, oh, it's the E-mini. And it's saying it's 21.96. But in fact, you're actually dealing with the options contract that's referring, and that 21.96 is referring to what is now the front contract for most of the E-mini world, which is actually the June contract. But the options contract that you're dealing with is the March contract. They don't even have the June contract out yet, I don't think. And I can show you that by compressing this. Do they have the June? Well, they have, I don't know what, okay, so April is actually the June contract. You can see because it has the M in it. So you could play the M, but you're not going to get the 0 days to expiration. These are many months out. So right now, the only 0 DTE contracts that are available are going to be for the rest of this week. Which are all the March contract. So you can see this is 1 day to expiration, 3 days is the Wednesday, and then there are 2 Friday contracts. Excuse me, I got to do something about this. There's an AM settled, which is the monthly. And a PM settled, which may not have any volume in it at all. Now, the AM settled will actually settle at 9:30 on Friday morning. And you can choose to trade that. You just have to trade it, from either very early in the morning from 8 o'clock and know that it closes at 9:30 and play that. Or you can trade it the night before on Thursday. But so far, the PM settled has really nothing going on, and you can see that it has no granularity to it. So Lance is asking, for volume profile in TradingView, can you explain the number of rows setting? When I play around with it, the nodes and wells seem to change in size, so I'm confused. All right, so let's tackle that. So we'll go to TradingView, which is right here. And there are two ways that you can adjust for the rows. The rows are really talking about the granularity of the volume profile. How many bars are on the horizontal, right? So that's what's talking about the rows. So let's bring up that setting. And that's under inputs. So there are two ways that you can do row layout. You can do number of rows, or you can go ticks per row. Now, number of rows right now are currently set to 200. That means that it will, by default, have 200 rows no matter what is showing in this chart. Let's get rid of this linear regression. So when I just did that, the number of rows or blue horizontal bars have not changed. It's still 200. Now the other setting that you have is ticks per row. Ticks is referring to each individual price tick. I prefer ticks per row. All right. Now, generally you want 1 tick per row. So I'm going to put 1 here. And then I'm going to change it to ticks per row. Now you can see when I change it to 1 under number of rows, it's giving me 1 row for all of the rows, all of the ticks that is showing. Right? So it's giving me basically what is the average of all the ticks that are showing. It's just crazy. But if I change it to ticks per row, you'll see it's far more granular now, much finer. Because now it is showing me, to the best of its ability, 1 row per tick on the X scale. So if price is moving up and down, and you know that with the ES it moves up and down at 25 cents per tick, it is showing me the most close representation using this setting. Ticks per row, 1 tick per row. So every time it goes up, 0.25 to 0.5 to 0.75, then to the next, you're going to get 1 row per tick. That will show you the most accurate representation per tick. Okay, please explain row size afterwards. That's where my issue is. Now, row size very easy. Row size is how many rows that you want to show in the chart. So if I show, see now, if I'm doing ticks per row, it looks like there's way more than 200 right now. But I could now choose how many rows that I want to show in the chart. So the ticks per row is going by the x-axis. The number of rows is showing me how many rows I want to show in the entire chart. All right. So if I only show 1, it's showing 1. If I want to show 50, then it's only going to show 50. Oop. What the hell is that?
New visitor.
If I want to show 50, it's going to show 50 rows. Now it's showing 50 rows. But you see that there's more than 50 total ticks on this x-axis. So it's combining some of them into the bars. If I show 100, then it will show 100 combined. If I show 150, it'll show 150 combined. If I show 250, it'll show 250 combined. So there's obviously more than 250 ticks on this x-axis, right? So that's the difference between numbers of rows refers to the total number of rows in the chart. Ticks per row is the number of ticks that you want per row, right? So you really want 1 there. You don't want 21. You want 1 if you want the finest granularity. Sometimes it won't be able to show you this because it's incapable of showing you this, the ticks per row. So for instance, if you put it on a daily chart, there's just too many ticks to show, and it may come up blank. So that's really what that is. All right. I'm glad that we got that cleared up. If you have any further questions about that, Lance, just give me a call. I don't know how else to explain it. One is to show it's all based on how many ticks that you can show in the x-axis. So there you go. All right. So for instance, let's go using the ticks per row and the finest granularity. Let's go to a 2-hour chart. Let's see if it will even show it. All right, so it's showing it. Let's go to 4 hours, see if it can show it. I think when we get to 4 hours, it can still show it. Let's go to daily, see if it can show it. Probably not with daily. Wow, even shows it with daily. That's because we can show enough data, but I'll bet you if I bring in more days, at some point it's going to not be able to show it to me. No. At some point. Yep, okay. Here, it can't show me that, because there's just too much data here for the granularity of my monitor. Now I have a super high resolution monitor here, so that's why mine at this level can show a lot of that. On yours, on your laptop or your computer, you may not have the kind of high resolution monitor that you have, so you may not even be able to show this or even this. So you have to result to number of total rows that you want to show. So the number of rows you want to show might be, say, 200, and that might be good enough granularity for you, like that. All right. He gets it now. Good. Excellent. So it's really a function of how many rows you can actually show based on your monitor. If you have a super high resolution monitor, like the one I have right now showing it, I have a lot of flexibility, and you might not be able to see what I see. All right. So let's go to what we saw in this past week. So this past week we had actually 4 trades. We had one on Monday, one on Wednesday, and 2 on Friday. Now the one on Friday I didn't actually put in the alerts. It was really a last-minute thing at the very last hour. All right, there was a question also in the talk channel, one about
New visitor.
doing back testing. And let me just say that it's impossible to back test a discretionary system.
Returning visitor.
Just impossible. You just can't do it. And then there was another question. You can't turn a discretionary system into a rules-based system. Well, right? Well, then it wouldn't be a rules-based system. See, a rules-based or a systematic system, really, once you put the human element in a system, no matter
Returning visitor.
no matter how many rules that you have, there's no way for a human to make it a purely systematic system. It's impossible because a human cannot do that. You would have to have it completely automated. That's the only way that you can really backtest a system, is if you have it completely computer automated. So, and in most cases, the way you do the backtesting, you take the very well-defined systematic approach, the formulas that you use in order to choose how a computer is going to take fills, open trades, close trades, and manage trades. And then through backtesting and the criteria that you have set up, whatever criteria you choose, it will go back however far back you want to go, and it will show you what the computer would have selected. That's assuming that you have all the right data, right? Because in most cases, if you're choosing a continuous chart to do the backtesting, all your data is wrong, because continuous data is not the actual data. It is between contract changes, it is estimated, averaged. So even if you do it with a continuous chart, it's still wrong. So backtesting is bullshit. That's one level of bullshit. There's a second level of bullshit on backtesting. The second level of bullshit is that you go back and you change the data until you get a nice looking chart. That is called curve fitting. Curve fitting is the perfect representation of what you would have traded if you knew what the trade was going to be in the future. Only you're doing it backwards, right? So you're giving... It doesn't work in the future now because you don't know what the future is. But you knew what the past was, so you went and you changed all the data to give you what a nice looking chart would be. And now most people will claim that, well, now I'll take that data and I'll use it for the future. The problem is it doesn't work for the future because you don't know the future. Well, they say, well, if I knew the past and how it behaved in the past, then there's a good chance that these settings will work in the future. That's also bullshit. So backtesting in general is bullshit. All right? I've backtested tens of thousands of strategies and charts. I know everything there is to know about backtesting. And I'm telling you, in general, backtesting is bullshit. You can backtest all you want. You ain't going to get the right results, and it will mean nothing for the future. I don't know else how to say this. Now, there is another type of backtesting. That's all because you're using something called in-sample data. Now, there is another couple types of backtesting that people use that say, from a statistical point of view, if they use randomized results, that's called Monte Carlo backtesting, that somehow you're going to get a better idea of what might work and what might not. Again, total bullshit. I can go into it in detail, but I'm not going to. The other type of backtesting that you can do that also gives you a better idea of what might work in the future is something called forward walking. That's where you take periods of time in the past. You go sufficiently far back and you choose a period of time, a range of time, and you come up with criteria that works. And then you allow that same thing to then forward walk to other periods of time that you haven't tested. And then if it works for that, then you say, oh, it worked for that. Then you forward walk again to the next period of time, still in the past, but using criteria that was way further than that, than that, and it still works. And so now you're going to make the assumption that because it worked for 2 or 3 other periods in time with criteria that you chose 6 periods ago, that it will work now for the future. Again, there's no guarantee of that because you don't know what the future holds. So even forward walking, although that is giving you a slightly better out of sample testing, it's still working with backtested data to some degree. And you don't know what the future is. All right? So only forward walking is also bullshit. There is no level of backtesting that you can do that will give you any determination on what's going to happen in the future, is the point. All right? Now, you can go to all your algorithmic buddies and they'll dispute this because they're trying to protect their IP and their idea of what works and what doesn't work. They're lying to you, or they're basically lying to themselves because they don't know what the fuck they're talking about. All I can tell you is that backtesting is bullshit. If backtesting meant anything, then you would have people that were billionaires left and right, and backtesting would work. It doesn't work. It's as simple as that. So, algorithmic testing in general, there are some types of algorithmic and systematic approaches that you can take that are superior to others. One of them is to use multiple strategies that are uncorrelated with one another and run them simultaneously. And then each of those back-tested results, if they have any kind of positive result, then combining them, if they're uncorrelated, will tend to give you okay results. Still not a guarantee. Now, another thing that people do with backtesting is that they'll give you back-tested results, which are already bullshit, but they won't include things like commissions and fees or slippage. Slippage is an important thing because entry upon any particular strategy will depend largely upon the slippage and whether or not you're doing a limit order or a market order. Most of these are figured on market orders. With slippage, there is a spread in the bid-ask. And if you don't choose the right price that you actually entered in, then the result is still bullshit. So what they'll do is they'll show you this nice equity curve, but it's without any commission and slippage figured in. When you put the commission and slippage figured in, their equity curve goes to shit. So every possible way that you could do and demonstrate or put up backtesting that shows a result is completely suspect. It means nothing. And one thing that's been shown in institutions is that the people who do systematic trading, completely algorithmic, compared to the people that do discretionary, are on par with one another. Excuse me. However, on average, the people who do discretionary trading tend to do better than the people who do algorithmic trading. That's a fact. All right. So now that we have that cleared up, let's move on to the next. Does anybody have any other questions, charts, algorithms, backtesting, that sort of thing? So, so last week we had two bad trades. Actually, we had three bad trades. The market has been in this kind of, you choose something, it looks like it's going one way, and then it goes the other way. Fortunately, because of our asymmetric risk to reward, there's small losses, no big deal. Same thing happens on Friday. We get into a trade, it goes completely the other way, it never recovers. It looked like it was going to,
Returning visitor.
from the overnight move, continue up. News was showing that it should have been that, and then it just went down and kept on going down. At the end of the day, I said, look, this is crazy. There's some point where we're hitting resistance, strong resistance. And so I put out a poll to the group, and I said, which way do you think it's going to go? Whatever way you think it's going to go, we're going to put on a trade for the last hour of the day. Overwhelmingly, everybody thought, excuse me, that the market would continue down. So I said, okay, we're going to put on a butterfly down, and we're going to make it unbalanced in such a way that if it overshoots, we'll still be profitable. Able to come up with an asymmetric trade, and not only did it hit, but it pinned. And some people made as much as 1,000% in an hour. It was a wonderful thing. So overall, if you took that trade, then you saved the week. You probably made real good money for the week off of a last hour trade. That's crazy. It's absolutely insane. And it got me thinking. It got me thinking a lot because I think there's an opportunity in these late hour trades, especially in a trending market. So I think in the future, when we have a trending market like that for the day, regardless of whether we're winning or not, we're going to look in that last hour, even on a distribution day. We're going to take a vote on where we think price is going to go in that last hour. And then we're going to put on an asymmetric trade if we can do it. So that's not the totality of
Returning visitor.
the change that I think needs to be made. I don't know what happened to me overnight, but I got this acid reflux thing that's tickling my throat, and it's really bothering me. I don't know. I feel fine. So that's going to be the one part of the pivot that I think that we're going to make. That we're going to start looking at trades late in the day, where there's very little time left in the day. We're going to play that power hour, put on an asymmetric trade, and try to take advantage, true advantage, of the advantage that we have with zero DTE, and that is that exponential decay. And I know that there's been other members that have been doing this all along, and they've been very successful. So that's part of what, a change that I'd like to institute in the service. The other thing that I'd like to institute is I'm going to start recording this kind of voting. And I want to see where that takes us. Sort of a crowd opinion of where they think price is going to go. We'll do it at the beginning of the trading day. Damn. We'll do it at the beginning of the trading day, and I'm going to record this. I'm going to see the kind of results, because I don't have a lock hold on where price is going to go all the time. There are some traders that are within the group that actually do better than I do, and I'd like to record that and find out if there's sort of a group think that has some validity here, and possibly in the future look at a gamification of the service so that we can discover who are the best traders within the service. When we have enough traders that participate in this, there's 500 people, and it's growing. When we get to 1,000 people, we may have actually tapped into something where the hive mind or the group mind may be smarter than any individual. So I plan on tracking that, asking the questions in the beginning and also throughout the day, and finding out, whether that group mind is superior to an individual mind, and then at some point have people start recording their trades so that we can find out also, and then score people's records and score, who is performing the best. So we'll have, like I said, a gamification of up-down voting, rewards in terms of your performance on that, and then leaderboards. Now, this is not something that I'm going to do right away. This is something I'm going to bring into the service. I want to find out if there's a benefit or there's some truth to this, that who are the best traders? Are they worth following? Is there a group mindset that actually produces better results than any one individual like myself? And then see if we can actually use that information to all of our benefit. So Peter's saying he made 1,000% off that second trade. Yeah, I did really well too. I actually put a trade on in my my big account that I didn't record, and I did really well on it as well. I made some good money on the that last hour. I got out early on that last hour, but I had put on a second trade that I didn't record, and I made a lot of money on it. But on that last hour, I did okay. I got out early, earlier than most, but still made about $1,000. Wasn't bad, but I made many, many more times that on another trade that I made. But I noticed that some people were making anywhere from 600 to 1,000% on that late day trade, and that certainly makes up for 2 or 3 weeks of losses if you had 2 or 3 weeks of losses. All right. Lance is asking, does it have to be the last hour of the day? Could it be earlier if we identify the trend early, like around noonish? Yeah, if there's a trend change, I guess. I think that you have to split it up into, I think that last hour is specific. I think by the time the last hour comes along, if it's whether it's a trending day or a distribution day, it's and depending on whether or not we're heading up into any specific market profile or support and resistance, I don't know. Maybe we can, take votes at the beginning of the day at noon, and then the last part of the day, which makes a lot of sense because the beginning of the day the market opens at noon. The European market closes. People are going out to lunch. They come back. Volatility is way down. Might be another time, and that last hour is usually very significant. Chris says this late day trade makes sense. Shorter time span, greater accuracy. Yeah. See, that's the thing. We get that full benefit of that premium decay, the greatest premium decay of any time in history of that trade, of that contract, in that last hour, and also the greatest volatility. Volatility starts spiking up in only an hour period of time. It makes a lot of sense. So I'm going to experiment with this, and if it goes well, then what I want to do is I want to add a gamification to this and start recording individual performance. And there will be prizes involved in this, by the way. One thing I'm thinking, maybe have at the end of a week or the end of a month, end of a week, you get credits for, good, bad performance, or no credits. End of the month, you can look at the leaderboard and leaderboard people, maybe the top 3, get something. Either straight out award, like I was thinking gold, right? I mean, the service is growing enough that I could afford to, to do that kind of promotion, and maybe half ounce of gold for the top guy, quarter ounce for the second, and a 10th ounce for the third, or something like that. I'm not saying that's what I'm doing right now, but I'm saying that that's where I'd like to bring it, so that there's some significant award for performance. The other idea is to, I don't know if that's legal to do, but what would be legal is that if you got these points, and these points resulted in a discount or a coupon code where you could buy the gold from me. So, in other words, you could buy a half ounce for practically nothing, or an ounce at, half price or something. What do you think of that? Let's see. Brian saying, do we predict that we will find the 1 to 5 risk to reward in the last hour of the day? Was that common or a one-off? You can still get a 1 to 5. It depends on how far out you put it. But that will be, obviously, if there's no 1 to 5, then it's not really worth doing. So it's not a one-off, but there are some days where that doesn't exist. So, you can't guarantee that that's going to happen every time. But we'll add that. So that's where I want to take the service. I want to find out if, and I think I already know the answer because I've been watching this very closely. There are some people that are just, they just slam this trade. Like there are some people that chose to go bearish on Friday's trade and they made a killing, right? I chose to go bullish. And those same people have done the same thing in the past, where they chose a different direction with whatever analysis that they're using. And I think it would be useful if, they want to, people are already putting out their performance there, but if, you wanted to record it and then have it validated, if at the end of the month, you're on a leaderboard and other people might want to follow your analysis. If it's better, I might follow it. And also have it reward related too. So, discounts on coins, discount on gold, or just outright reward. So that's what I'm thinking. Because, the systems, the methods, the strategies, they work. They're discretionary. And the discretionary part, sometimes can lead you one way or the other. There's no lock on who's always right. And even within the course of a day, you could have two different trades at two different times and be right on both, be right on none, or be right on one and wrong on the other. So that's what I'm thinking. That's the place that I'm gonna start recording, and I think by the end of this month, maybe the end of April, we'll start looking at this sort of gamification of the service. And I think that that's something more official. Right now, I'd like to get people. I'm going to start asking for a vote during the day and see where that takes us by the end of the month. And then we'll go from there. I don't know if there are any questions around that. If you like the idea, I certainly like the idea of that last hour power hour trade. That that seems to have validity in certain types of markets. I don't know if it will happen all the time. I can guarantee you it won't happen all the time. But I think that probably, you could probably see 50% of the time we could have really valid trades that are great right at the end of the day. And for people that have smaller accounts, those might be the trades that they want to take, quite frankly, because they represent, I think, a lower risk. And if you can come in at a lower cost, you'll get an immediate result. And it says your proposal will only be valuable to me if members post their detailed analysis for posterity and not just binary up and down decisions. Well, I think I think that's true, and I don't know exactly how that will work. That's why I'm not so sure that. Well, see, there are two different proposals here, Lance. There's one where you find a leaderboard and look at their analysis. I don't think their analysis is really fundamentally different. In most cases, I know that may sound contrary, but it's not. But I think the group or hive mind voting to determine whether or not, as a group, that we choose an alerted trade doesn't require analysis from individuals. But the idea of the gamification might. And if that does, then we can... there's probably another way that we can do this. And I know that I have tools that allow me to gamify individual blog posts as well as the courseware you can gamify in a way that people can put their input there and their specific analysis. But I don't imagine that the analysis is going to change much, just the conclusion of the analysis. All right. I think my voice is breaking down, so I've got to go take care of it. I don't know if there are any other questions on this, if you like this idea. So again, let me just repeat. The first part is taking voting. And we'll do that as just a normal course of what we do. Second part is if there is a vote and an end-of-day trade, then we'll go with what the vote says. Third part is if all of that goes well, then look at a gamification of the service itself. Yeah, I've looked at Spot Gamma. They're not always right. Sometimes they've been right. Sometimes they've been wrong. It's like looking at Max Payne. Sometimes Max Payne works. Sometimes it doesn't. Max Payne certainly didn't work on Friday. So, and also relying on outside services like that. Again, it's all part of more information and interpretation and choices that we make.
Returning visitor.
I'd rather go by the individual's choices, or the group choices, or the individual's choices. Group choices, I think, will be interesting to see, how the hive mind works and whether or not there's value in that. And then the gamification can be used to find out people who consistently rise to the top and see if there's value in that. And after another year or so with this service, we're going to probably have 1,000 people in it, I hope. And that's a significant block of intelligence, I should say. And I think that it could produce incredible results. Gamification, is there any value in it in general? Of course. A lot of people are showing all kinds of incredible benefits from gamifying business and business decisions. All right. So that's how we're going to progress. It's going to be a, step-by-step process. First the voting, then the voting and the last hour power hour trade, and then the introduction of gamification. I think it's going to be cool. I'm looking forward to it. I think it'll add a very interesting dynamic to the service, and couldn't hurt the service. I think it will only have the benefit of enhancing the service, because it will only be introduced if it works. If it works, then that's great. And I think it's worth looking at. And it's like I said, it's a trend that I've seen. I mean, I'm uniquely positioned to be able to watch everybody that is reporting or telling me what they're doing, and this is something that I'm seeing, that some people are just fantastic traders. All right. Any more questions? If not, then we'll wrap it up here. I want to thank everybody for showing up. I'll be looking at the market tonight, and I will edit this and get rid of all of the coughing and all of the nonsense that all the dribble that came out, and so it will be a nice, more compressed retrospective. Thank you very much. Peace to you all, and we'll see you soon.